Welcome to the Money and Wealth Show. Brought to you this week by AmericanManganeseInc.com.
American Manganese Inc. has a manganese deposit in Arizona. Indicated 6.7 billion pounds. Inferred 8.9 billion pounds. Potentially the lowest cost producer of electrolytic manganese. American Manganese Inc. has a projected cash cost of 44 cents a pound. The metal trades near $2 a pound. Do the math. Trading symbol AMY. Visit AmericanManganeseInc.com or phone me, Larry Ray, at 604-531-9639. Molycorp Gold Corp has substantial assets. Magnesium deposit, inferred 52 billion pounds. Molybdenum deposit, indicated 1.9 million tons. Inferred 1.8 million tons at 0.087% MO. Past silver producer, average 182 ounces per ton. Trading symbol MOR. Website molycorp.com or phone me, Larry Ray, at 604-531-9639.
Always consult your investment professional before making any investment decision. The Money and Wealth Show is archived online at talkdigitalnetwork.com. Here is Danielle Park.
Hello, Kelowna. I'm Danielle Park, and I'm here with Marc Faber, international economist and traveler, investor, author of the Doom, Boom, and Gloom report. And I was wondering, as I was thinking about this interview, something that's always struck me is that you picked that name when in the early 1990s?
Yeah, I started writing in the 1970s because I didn't trust the research of the brokers who were always optimistic and bullish and so forth. But then when I started my own business, I used the name Gloom, Boom, and Doom.
And because every cycle that you've ever studied through history has those components to it?
Yes, I mean, you know, it's not a question to be a perma-bear or a perma-bull. It's a question that markets move up and down for all assets, whether it's real estate or equities or bonds or commodities. And so you go from a period of undervaluation into essentially a bull market, and then you go into overvaluation, where essentially you have more and more people joining the party and turning overly optimistic. And then obviously when the maximum level of optimism has been reached, the markets start to break, and then they go back into undervaluation. And these fluctuations in markets have actually been enlarged by government interventions, notably by monetary policies. So you have a printing of money and then asset prices go ballistic, but of course not all assets at the same time. That is the issue.
So one of the things that in that cycle, where would you say we are presently post the credit bubble bursting, but where would you say we are?
Well, the thing with money printing is this, that you can essentially, as Mr. Bernanke said, drop dollar bills onto the United States. And the difficulty is for him and any central bank to know where they create symptoms of inflation, which can be consumer price increases or can be wage increases, can be increases in the price of real estate, of equities and commodities and so forth and so on. So 97 to 2000, they created essentially unintentionally the Nasdaq bubble, and then it burst, and then unintentionally there was a housing bubble, and then it burst, and in 2008 we had a commodities bubble and so forth, and then in 2008 everything collapsed, and we made in equity markets around the world, in my opinion, a major low on March 6, 2009 with S&P at 666, and since then equities have performed reasonably well, whereby again within the equity market, not all equities move at the same time. So lately, the economic sensitive stocks have done badly, but what has done well since last November, December are financial stocks and housing-related stocks in the US, because they became very depressed. But mining stocks have performed horribly. And that is the challenge for individual investors, to be positioned in the sectors of the markets that go up and avoid the sectors that go down.
So if I could ask you about the money printing aspect of this, because
Yes.
as you were saying, there's a definite demand cycle that's at the root of each boom period, but then there's monetary intervention that magnifies it, makes it
Yes.
much greater than it would have
Yes.
been. So you
Correct.
saw a commodities boom in the early part of your
Yes.
career in the 1970s when you first came
Yes.
to Wall Street.
Yes.
What might be different or the same about that commodities boom versus the one that we've recently lived through?
Well, basically, in 1970, if we take gold as a proxy, gold had been at $35 essentially since 1933. So it had been extremely depressed compared to, say, the rate of inflation by 1970. And then it went up 25 times, partly because of the dollar weakness and partly because of money printing, which was hand in hand. And I guess that, we are up on the price of gold from $251 in 99 to now $1,650 in dollar terms per ounce. I think eventually we'll go higher, but exactly how much higher, I don't know. And it could be that whereas gold has grossly outperformed stocks between 99 and recently, that for 1 or 2 years equities go up. Because as I said, when you print money, you create these explosions of inflationary symptoms. And it could be that stocks go up more. So I wouldn't necessarily be short stocks. But I think whereas last October and December, the markets, stock markets were very oversold. Now we're very overbought, and I would be very careful about buying stocks right here.
So back to the idea about the money printing. You subscribe to more of an inflationist than deflationist camp, correct?
Yes, I mean, I tend to agree with the deflationists that one day the whole system will cease to exist. It's just gonna, like your computer crashes and then you have to reboot it, there will be a rebooting of the global economy. But between now and then, what stages will you go through? I believe we will have more and more money printing. That I'm convinced. Because the economists that we have at the Fed, they have no clue, basically.
Okay, if I just can
yes.
I just ask you about that? Because we've never had a period that I'm aware of where you've had this many governments and this many central bankers
Yes.
printing at the same time. You can look
Correct.
at Japan, you can look at Germany,
Yes.
but they were not concerted all over the planet. So at some point, what is the catalyst? Because it's a race to the bottom. Is it that the real people or the workers, the proletariat, rise up and take back power?
Yeah, well,
What
I think
happens?
that you make a very good point, because when you print money, and we have evidence of this, that over the last 30 years, wealth inequality and income inequality has grown dramatically. And you have now cracks that appear. The prestige of the financial sector is being eroded, and people ask more questions. A lot of individual investors, they say the markets are manipulated, we don't want to have anything to do with it, and so forth and so on. But exactly what the catalyst will be, I don't know. Normally, what happens in this situation is the printing goes on. The middle class and the lower classes, they don't participate. The 1%, so-called 1%, I would even say the 0.5%, they benefit the most because they own financial assets, they own real estate, they own precious metals and paintings and this and that, all inflating assets. And one day, the people are very unhappy, and so to distract the attention, governments usually go to war. Or they blame it on some minority, or they blame it on the Chinese, or whoever it is that comes to their mind. And then you can have trade wars, and you can have military action in the world, and I think that will be an outcome. But for sure, that I guarantee you. For the rest of history of mankind, you will not have quadrillions of derivative products in the system. It's going to be one day just going poof away.
A big enema to clean it all out.
Clean all.
Won't that be wonderful?
Yes, I think so, yes. And it won't have much damage on the real economy. Let's say I live in the north of Thailand. Do you think the people in the north of Thailand have anything to do with the derivatives in the world. They won't notice the difference.
So would you liken this period as much worse than what happened in the 1920s when
Yes.
we led up to the big crash? This
Yes,
time is much worse.
Much worse. First of all, in the 20s, you know, America was a young country, and people had a different attitude. There was no Social Security, there was no Medicare, no Medicaid, and so forth. So people relied on themselves and self-help. Now you have this entitlement society. If something goes wrong, the government has to help. But the government precisely created the crisis in the first place, and to rely on government help, you will make matters much worse than they are already.
But things that can't be paid for won't be paid for, right? At some point, promises have been made for entitlements that won't be paid for.
The thing is this, you can pay, but in worthless money. You know, that is, but then, of course, you have a poor economy and high inflation because the people that receive the entitlements, whether it's Social Security or Medicare benefits and so forth, or pensions, they get it, but in money that don't buy anything.
But if you can exchange that money for medicine, water, food in your own country,
yes,
is that not liquidity?
If you can, but you know, in high inflation periods, what happens is that in the morning when people get the check, they all rush out to buy something, but nobody wants to sell it to them because they get the money and they know it by the end of the day, the inflation will have eroded the money. So the problem of very high inflation economies is that the shelves are empty. So the market ceases to exist. If I'm a farmer, I see prices go up, say 10% per day. I'm not going to sell you anything. I'll keep it in the ground, or I keep it in storage.
Or you go to a barter system.
Yes, yes.
But can you imagine globalization in the world on a barter system?
Well, I think in some cases we will move to a barter system, yes, for sure. Yes,
and surely we'd be trading water and food more
yes,
than...
I mean, I always tell, you know, we are in a financial situation today where the investor should not just ask, how do I make money? But he should ask, how do I preserve money? And what is actually safe? You're like, in a breakdown of society, you don't want to necessarily live in big cities. But in the middle of the countryside somewhere, in the middle of nowhere, probably it's reasonably safe. So to have a farm somewhere in Canada, I mean, for me, the climate is a bit cold, but say for other people, it's agreeable. So well, that is something I would do.
Something about Canada. I live in Canada, and you travel here fairly regularly.
Yes.
And you were noticing about our real estate prices being quite high relative to other places.
Sky high.
And I noticed that there's a
This is also a symptom of inflation created by the Fed. Because it boosted the Chinese economy, excess liquidity in China, and part of it found its way here into Canada.
Right. So I'm actually thinking, isn't Canada perhaps setting itself up for a very disappointing period where people are over-invested into non-productive real estate, are used to cheap money coming into the commodity space from stimulus in China and the United States, and now perhaps we're going to see the downside of that again? Yes.
I mean, I think, you know, the problem is, as I said, the money printing creates these bubbles, but not all at the same time and with the same intensity. And we had first the real estate bubble in America. It came to an end. Superimposed on that, we had the real estate bubble in China, and Singapore high-end, Hong Kong high-end, and Canada, and Australia. Now in Australia, the real estate market has started to break down. Some banks have already announced large losses related to real estate developments. And I think, yeah, it will happen in Canada. The question is, from what level? Will it happen from this level or from 100% higher and then down big time? But of course, as I said, prices move up into overvaluation and then they go into undervaluation. I don't think there is any value in Canadian real estate at the present time. But, you know, in this huge collapse I'm talking about, and we don't know whether it will happen now or in 10 years' time, in between, and when it happens, maybe you're better off in real estate on a non-leveraged basis, where you still have the roof over your house and farmland and so forth, rather than to have your account at MF Global and poof, everything is gone.
Exactly.
You know, that is the point.
Yeah.
You know, I think people should wake up and realize maybe we're all lucky if we can keep 50% of what we have today when the big bust occurs. And if everything collapses by 90% or becomes worse and you have only lost 50%, you're the king.
So let me ask you this. You've been around a long time. You've been in financial markets for more than 40 years.
Yes.
Are you a longer-term pessimist that you think civilization will end?
No, I'm very optimistic because I ride motorcycles in Thailand, so you have to be an optimist. And, you know, I do all kinds of things. But you have to be realistic. And what can't last forever won't last forever. You know, you have this huge overexpansion of the financial sector relative to the real economy. So a real economy would be this size and the financial sector this size. But now we have the real economy this size and the financial sector goes up 20 stories high. And that one day will be deflated. The same. You have this huge wealth inequality today, where some of the rich people, they make a lot of money, and the rest haven't progressed in the last 20 years because their minor salary increases have been offset by rising prices. So they're actually worse off than 20 years ago, the working class and the lower middle class. And that will not last forever. The aristocracy in Europe lasted for a long time, but not forever. They ended with chopping off their necks.
I was just thinking the French Revolution. I mean, that was an epic spending on debt, fueling wars in other countries.
Yes.
And finally, the proletariat come to the gate and take back your castle. Right?
Yes, yes.
So
as happened in many countries. Or in Russia, what happened then, you had communism, same in China and so forth. So nothing is permanent. But, you know, I'm 66, so I'm not so worried about these things. It will happen maybe after I go somewhere.
Well, I'm glad to hear you're not long-term pessimistic, because it seems to me that people have been looking to governments in different phases of history. This is not a new thing, where people, first of all, think governments can save us, then realize they can't, then behead them, and then start over.
And by the way, you know, the more pessimistic you are, you have to think, what is the asset I really don't want to own? I think it's government bonds in the long run and cash. Equities, you know, if everything collapses, the corporations, they'll probably survive. There'll still be, I guess, an IBM, or there'll still be a Triple M, or there'll still be, say, a Canadian Pacific Railroad, and so forth and so on. You just have to choose companies that are not over-leveraged and that are run conservatively. But say a basket of equities will preserve some wealth. It may go down, as I said, 50%. But maybe 50% is better than to lose all your money in Greek bonds.
Or one layer of risk that I think may be new in this dynamic is this whole levered traders, high-frequency traders. And isn't there a risk that, yes, the company might be there, but you're trading a paper asset version on markets that are subject to all these crazy forces?
Yes, exactly. And I mean, this high-frequency trading, you know, there can be events when it just doesn't work anymore. The markets are closed and so forth. So I would be, say, very reluctant to give all my money to someone who does high-frequency trading or so.
Or you're participating with them, though, when you're in these markets.
But in general, the best advice I can tell people is you have to diversify, because you don't know exactly when it will happen, and if it happens, and how the world will look in 5 or 10 years' time. So you want to have some assets or some money in precious metals, and some in real estate, and some in equities, and some in cash. And you have to probably also diversify essentially the custody of your assets. And you have some in Canada, some maybe in Australia, some maybe in Asia, in Singapore, Hong Kong, and so forth.
Okay, well...
But you need a lot of money.
I was just thinking, that's the 0.5%.
You have to afford to lose the 50%.
That's right, and still have enough to spread out in all those accounts and countries. And
well, you know, in life you can also live modestly. So don't need to have always the highest luxury.
So your bottom line on the banking sector, the smaller it shrinks over time, the greater the gift to humanity will be.
Yes, I mean, I think the whole financial sector will have to shrink dramatically. And I always argued, you know, the bankers and so forth, they went to the governments and said, oh, it's a disaster if we fail and so on. But basically you could have ring-fenced the banks. In other words, the depositors that have their, and the bank has a fiduciary duty and a social function in a system and so forth, and should essentially be a store of value for your cash. Now, what you could have done is the depositors protect them. And the rest of the bank, the whole trading aspect of the bank, you farm out and let them solve their own problems. Because that sector is, say, Goldman Sachs owes money to AIG, AIG to UBS, UBS to, I don't know, BMO or whatever it is. And that, in my opinion, has no economic function. It's just trading among each other.
Right.
And if that disappeared, I don't think there would be great economic damage.
Well, in other places...
On the contrary, the problem is that most financial people are so useless that you can't retrain them.
Right.
They couldn't become farmers. They can't even be taxi drivers. They can't fix anything.
Right.
They are totally useless. So the governments have to keep them busy in the financial sector because that's the only thing they can do. Buy and sell and buy and sell.
But we're in a massive downsize. They've been laying
Yes.
them off, right?
Yes.
So more of that
Yes.
to come.
Yes.
Learn how to farm.
Yes.
Learn how to do what? Be a good walker in case you need to get around without fuel.
Well, in America, you have record gun sales at the present time. So I guess a lot of people are learning how to shoot.
And I think, you know, in the end, he's already said he's an optimist. It's just keep your powder dry, don't believe governments, and don't become a banker. Tell your kids. Thanks, Mark. I really
pleasure.
appreciate
Yes,
meeting
my
you.
pleasure.
Thanks
Thank
for
you.
coming and speaking to
My
us
pleasure.
today, and thank you.
The Money and Wealth Show has been brought to you by AmericanManganeseInc.com.